Fire when ready, Ridley.
Okay, we good to go? All right. So, BMR. FX. Oh yeah. Combine them. That was the idea, okay? There should be a really cool graphic here, but I uploaded my presentation a little late, so that was one of the things that didn't make the cut. So does everyone know what BMR is? I should probably ask first. No. Okay. Maybe someone else should have gone first. It's okay. No, it's okay. Okay, so in a BMR means blended monthly rebalancing, and so it's a longer term system where we're going to take a portfolio of stuff, normally a list of ETFs for broad markets, run a calculation to give them a score based on their recent momentum. It's called blended because it's a blend of the 3-month and a 6-month look-back period, and it's weighted towards the quicker, weighted towards the 3-month. So basically what it means is we're going to take a list of ETFs normally, and we're going to rank them once a month, and then we're going to take our capital, let's call it 100, split it into maybe 3 different chunks. That's normally what people tend to do. And then we're going to take the top 3, i.e. the highest ranked ones, and we're going to invest in those for the following month and hold them without stops. And then come the next month, we're going to do the same thing and repeat the process. We're going to do a calculation, rank them all from top to bottom, take the top 3, sometimes it's 4, people have different ways of doing these, and then rotate again for the next month. Did I get that close enough? Okay, so what I've been running BMR myself for I don't know, like 2.5 years or something like that, just trying to get a general feel for it. And so for the guys that do follow BMR, I've been doing it with ETF 13, and that was just based off of some research that, the guy's name escapes me now, but it was Kim. We talked to him in, anyway, I won't waste time on it. Anyway, some guys did a lot of research has been done on this. It's pretty tried and tested, and so I took an ETF 13, and it tended to work pretty well for me. But what I was curious with was, could we apply the blended monthly rebalancing concept to currency? Because I used to trade a lot of currency, and I thought that currency, how about that one? Here we go. So I figured that currency has got a long moving trending markets, right? Currency trends tend to kick off, and then they tend to kind of keep going for a long time, and that should be very favorable, I hypothesized, for a BMR type system. That's just an overview. Let's just jump right into the hypothesis. So long trending moves. So what I was thinking was, if we could isolate the performance of an individual currency, because currencies are traded in pairs, and so you can rank all the pairs, but that gets a little bit weird. So if we took the individual currency out of it, and then we do some calculations on those, rank them, combine them back together into pairs that we can actually trade, and then hold the best performing or the weakest performing ones of those for the following month. So if we could do that, then we would ultimately be trading the strongest currency against the weakest currency and holding that for the month, which seems like a good idea. In the BMR style, we'd pick the top 3 or 4, hold them for the month, and then rebalance again a month later. Maybe shorter terms might work as well for this. And then the idea would be to possibly you could use this as a filter for shorter term trades as well. So it's maybe swing trades or intraday trades. So if the idea is that this is going to show you what the strongest currency is right now and the weakest currency, and we can pick out how to trade that pair, well then I should be able to hop into the lower time frame charts and then find some opportunities there as well. Is everybody with me so far?
Yep.
Okay. Okay, we talked about the FX, long trending moves. There's a lot of leverage available. BMR classically doesn't use leverage at all. and I don't think you probably need to either, but it's just an interesting thing that with currency you can use a lot of leverage. So that could either mean that you can leverage your position up very big, or you could use a very small amount of capital possibly to get the same effect. So, you know, with like 50 to 1 or 300 to 1, you can literally, like say you want to trade with 100 grand's worth of a normal portfolio, you could be trading with a few grand and it's going to give you the same sort of result. And then another idea, just on the hypothesis, was could you use FX as sort of like the cash portion of the BMR system. So for those of you that aren't familiar, the blended monthly rebalancing system isn't always in the market. There's a moving average filter, which will say, okay, you know what, nothing's working right now, so let's just hold cash. And then there's a question over, well, how do you want to hold your cash? Is it literally cash, or do you put it into bonds? A lot of guys use TLT for holding that cash component. And so my theory was, well, why couldn't we hold cash in a different currency? You know, just because most of us are probably trading in US dollars doesn't mean the dollar is the best currency to be holding right now. So maybe we could use this as a cash, as a filter to say which one should we use for the cash side. Does everyone here, are you guys familiar with FX, like currency? Pretty much, anybody not? Okay, cool. I'll run through quick, but I'm thinking about the 8 major currency pairs listed here. Aussie CAD, Swissy, Euro, Pound, Yen, Kiwi, and dollar, US dollar, okay? As a quick refresher, if we're trading Euro dollar and Euro dollar as a pair is going up, that should mean that the euro itself is going up, or the dollar is going down, or both. If the euro dollar, the pair, is going down, that should mean that euro is going down, or the dollar is going up, or both. So when you're quoting it, the euro here is called the base currency, and the dollar side is called the terms currency, or the quote, or there's a few different ways people call it. But that gets important as we try to work out the way that things are quoted. If we put these together, so we've got 8 currencies, and it turns out that when you pair them all off, there's 28 different pairs that you can trade. This is a way of looking at it. Didn't come across so well, but that's basically all of the 28 pairs just listed by the base currency first. Okay, so what we want to be able to do first is isolate an individual currency. Because we're all trading as pairs, we can't work out what any individual one is doing. There's a few mechanisms that do exist for this. So like you could trade currency futures, and so you could trade like EC is the euro, and BP is the pound, and JY is the yen, but they're all against the US dollar. And then there are ETFs that you can use as well, but it's the same thing. So FXE is the euro, FXB is the pound, and FXJ is the yen. But it's the same thing. It's always against the US dollar, so you're slightly limited. And actually they quote the yen is quoted the other way around than it would be on the spot price. But so how can we take the individual currency and work out how strong it is relative to all of its peers? That's what I've been thinking about this for some time, and then I came up with a way to possibly do it. And it really comes down to a hat tip from the TradeStation Labs guys, because I found an article where one of the guys had put something together that was similar to this sort of concept. And so what I did was take what they'd done and then change the calculation around to make it more BMR style. Okay, so this is where I made things complicated. So I'm going to run through this quick because it doesn't actually matter. So the general idea is we're going to calculate BMR for every pair. So if we're doing pound, then we've got pound Aussie, pound CAD, pound Swiss, euro pound, pound yen, pound Kiwi, pound dollar. So we're going to do a BMR for each one of those pairs. If the BMR value is positive, that means it's good for the pound, as in plus, and it's bad for the Kiwi. So we give it a minus score. We're going to calculate a strength score for each individual currency by summing up all of those and then dividing by 7. So basically averaging them. And so what that tends to look like is, here's all of our pound pairs. This is what the actual BMR score is at the top right here. There's a one gotcha in here, and it's that if it's quoted the other way around, like euro pound, you basically need to multiply by -1. So the minus 2.05 for euro pound is actually good for the pound. So that turns into +2 over here, and then you get an overall score of +2 for the pound itself. So the pound comes out as +2, and the Kiwi comes out as minus 5.68. We put them back together in the pairs. It's a minus minus again. So that comes out as 7.75. And then we take all of these and rank them. Okay? Yeah. Oh, I got a double slide in here, sorry. Triple slide in here. Okay, so this is what it looks like when we rank them all. So this is a trade station, and I've just used this, and here is our ranking all the way down. If we put it into an indicator form, we can get a time series of it. Some of this stuff is useful, okay? So this is the most useful part for me, actually. So this indicator here is showing the individual pound and the individual Kiwi. The pound is above 0, this is a 0 line, and the Kiwi is below 0. And then down here is the combined score that we just calculated before. So this is all just based on the same numbers we used previously.
Crossovers matter.
Crossovers matter, yeah. And so it's interesting to see a couple of things. One of them is when the score is above 0, it means it's positive. The currency itself is positive. When the score is not, it's negative. There's also, you can see some of the trending behavior, right? This little indicator down here, there's a 0 number here. I don't know if this might be hard to see. I know it's a black background, which doesn't work that well. It goes red when it's below 0, and it pops into green as it's above. And then there's a little cross, which basically means that both the pound is strong, as in positive, and the New Zealand, the Kiwi is weak, negative. So they're both moving in the right sort of direction. Anyway, so I thought, okay, this is pretty cool, and this is, I'm learning some stuff here. I can see the individual currency scores now. This is interesting, and I can see what's happening there. So, and I've got a rank. I got this new rank that I can use, and I can apply BMR to this. So I thought, I wonder what the BMR rank looks like next to that. Like if you just did the normal BMR, the classic one. So I put that in right here. And so this is my newly calculated one here. And this is the classic BMR one here. They're exactly the same. Which, of course, they're exactly the same.
Because math.
Because math, yeah.
You have reinvented the
I know. Yeah. You pull it all apart and put it back together again, and the numbers are different, but the ranking is exactly the same. So what was the point of all that? I don't know. Actually, I do. I learned some stuff. So that's always useful, right? And now you guys don't have to go down this path, right? Because I did this for you. One of the most interesting things that I found was something that I've been looking at for a long time, ever since I was trading currency intraday and that sort of thing, which is breaking the individual currencies down into different ways. And I've seen guys do it before, but I wasn't quite sure how it was done. And this is a way that I understand that worked out for me. This one here, this will be almost impossible probably for you guys to see, but it's basically showing you what each of those 8 currency pairs is doing from its own strength score. And so this line here is 0, and then each color represents one of the currencies, and it's all kind of quoted up here so you can tell which one's which. And this is the same one as the middle one from a few slides back where I showed the pound and the Kiwi. This is just showing all of them on the same chart now, okay? And so what I found interesting here is I could take a look at this as a snapshot in time. Okay, yeah. So this is the elephant in the room is why does this yellow line suddenly jump up? And it's when the SNB unpegged the Swiss from the euro. So that went weird, but I'm glad that I can see that on here somewhere. Because if I couldn't, then that would be bad, right? But if we take a look from, after that got filtered out by the market, then the Swiss is still this one up here, and then down here is the Kiwi. So right now, Swissy is the strongest and increasing, and Kiwi is the weakest and decreasing. So that to me says, okay, so here are the numbers in case you couldn't read it on the chart there, okay? So Swissy has got the strongest score, and the Kiwi has got the weakest score. So that says I should be long Swiss Kiwi. Does that make sense to everyone? Okay. So if we go back at our overall matrix, and I just blow up the top 5 or 6 and the bottom 5 or 6, this is what stands out, is that you can't go long Swiss Kiwi because it's quoted the other way around. It's the Kiwi Swiss is the way that the spot price happens to be quoted, okay? So it turns up on the matrix to be the lowest one on the chart. But that's not necessarily wrong, right? That's not telling me that this is the weakest thing. Well, it is, but currency doesn't work that way, right? It's always relative to something else. So one's strong, one's weak. So if you're shorting currency, it's not like a bad shorting thing that people get hung up about. You're just long one and short the other. It's always the same. So we need a way of being direction aware. So here's what I did. We take all of our scores. We take an absolute value of the score. We rank them, or sort them. We keep track of whether it was positive or negative, which is basically just by looking at this one. Was that negative? Oh yeah, okay, let's keep track of that. And now we know that when we get into our BMR actual trade, you know, which direction are we going? So that just means we need to be short this one. So the way this turns out, we get a short Kiwi Swiss, a long Swiss yen, and a short Aussie Swiss. That's our top 3. Okay? So after all that, we're coming back to BMR stuff.
Can you do historical testing to find rankings through time?
I did it in Excel.
Is that a yes?
Yes.
That's good.
Okay. Hold that thought. It's a good little interlude here. Sonal's my girlfriend who couldn't make it this time around, so I'll be presenting her stuff probably tomorrow. We pride ourselves in trying to come up with stuff that's cool that we can, you know, explain to you guys, and you can take it away and use it immediately. And this may not be one of those. It's a little disclaimer right now, okay? But however, I know that what we do have is a whole bunch of smart people in the room, and actually I need your help on this, because this is a research weekend. This is what it's all about, right? And so I'm going to take you down as far as I've gotten. It's a work in progress. And then maybe you can make some suggestions for me on the next leg, okay? So let's get into the back testing. How can we test this and see how this worked before? So there was a way in TradeStation I thought I could make this happen through a little product called Portfolio Maestro, which does some ranking stuff. It's a little bit limited. The way the ranking possibilities are limited. So I went down that hole, came back out again, and said, okay, I got to do it manually. So here's what I did. I dumped some data out of TradeStation. So basically what it does is it's daily data, just like we look at for most of the BMR stuff. Even though we're looking back 3 months and 6 months, we're looking at daily data. For each of the 28 pairs, we're going to find the last day of the month. We're going to record and basically just dump out what the date was, the price, and then I'm using that value that I just came up with, the calculated, complicated thing, but it wouldn't matter if you just use the BMR value, and actually I tested it that way too. And I just tested it by, because we have all the data here, right? We got the date and the price, and that's pretty much all we need. As far as TradeStation goes, it had 6 years worth of data, daily data, for all of the pairs, all 28. Some of them had up to 18 years, so some of the major, the bigger ones have more data. So I kind of tried to focus a little bit on each. And so I tried to rank it in Excel. I'm going to pick the top X, and I'm going to record what those results look like, okay? So here's how the spreadsheet looks, because I know you guys are spreadsheety people. Bar number doesn't really matter. This is a TradeStation date code. That basically means 2015-0529. So that was the one that we just did. May 29th was the last month. And then we've got Aussie CAD, Aussie Swiss, and Aussie Yen. And then this goes out 25 more times, okay? And we've got price. The percent change just calculated off price. This is the BMR number that came from my data dump and the direction that we talked about before, so we can keep track of which way we're supposed to be trading this. Repeat, and then so this just gets older through time, okay? Okay, everyone got it? What does it look like? It's a mess. So this is, I should explain what we're looking at here. The different colors represent how many we're going to take and hold throughout the month. So This sort of purple one here means we're just going to take the top one, like Bill likes to do. Take the top one, we're going to take the strongest and trade it against the weakest, and that's it. Then we got top two. Top two would mean we're going to take, you know, the first strongest against the weakest, and then the second one, so the two the highest ranked, and then we're going to trade them in equal parts. And then we do top 3, 4, 5, 6. I stopped at 6 because it didn't seem to matter anymore. And so this goes back those five or 6 years. I think it's basically 5 years once all the calculations are done. Okay. And so my initial tests on this, because I'm more of a TradeStation Cody sort of guy than an Excel sort of guy like Ken is. And so when I first put this together, I did a little test on like 3 pairs. I think there was 3 Aussie pairs that I showed you, and it was up like 400% in those 5 years, something like that. This is looking great. This is just the first couple. Well, it turns out I did it wrong. Right? I knew what was. I could see the future in that test. I knew what was going to happen before it happened, and I just got my dates wrong. So I was ranking based on the month that we just did and taking the best value for the month we just did, right? This is easy to do, even though it sounds dumb. Anyway, so I corrected that, and I just got discouraged a little bit because the results didn't look so great.
To be clear, 100% means it was flat over the test period?
Yes, yeah, sorry. So if we started at 1, as in here, they all start at 1, and then how far up do we go? So it goes up about 10%. Stuff happens quickly, and it sort of recovers. Stuff happens again, back up the other way, and then we kind of drift along sideways. I've just put the results up in picture form because it's kind of just easier to look at. So I'll post all the spreadsheets and stuff once I kind of make them less dirty. But no, I'll just post them up on the on Basecamp as well, so you guys can dig through, because all the data is on there. If we go back to all the data that I've got, we can still do the rankings. And all it means is that for the pairs that didn't have any data, they just end up as the lowest ranking, so they just don't get selected. So if we do that, then the numbers look kind of similar. So this goes back. Oh, I'm sorry, let me back up. This is actually with the classic BMR calculation. So without using all the complicated stuff that I went through earlier, where I'm trying to sound clever, this is just using straight BMR as it is. It's pretty similar, but it's a little bit different, so sometimes the rankings are going to be a little bit off. If I go back longer term, so this goes back to 1998. So I couldn't use all the pairs for that, but like I said, it'll pick whichever ones it can, and then filter it through.
I want you to notice the sharp reversals after extreme move.
Mm-hmm.
I'll comment on that later.
Yeah, so this is with the complicated calculation. This is with classic BMR calculation, which actually looks a little bit better. I don't know why. Still not good though. Still nothing that you'd really want to
well, except
try.
What you have are extended periods of trending and then very sharp reversals when you're looking at those top 1 and 2 equity pairs.
Yeah.
That's important information.
So I think I know why the reversals happen.
So do I.
What I also thought was interesting is that this one here stands out a little bit different, but on the previous ones, you know how all the lines are kind of together? It doesn't seem to make too much of a difference whether you're trading the top 1 or the top 2, 3, 4, 5. A lot of the times on the other BMR systems, that makes a significant difference. So what does it all mean? I think one of the big problems is correlation, which is one of the things I wanted to sort of build into it, but it got a little bit too complicated. So correlation meaning, if we go, I think I put that slide back in. Do you remember this slide from a while back where we ranked everything, we found the absolute value and everything, we came up with these 3? Well, what do you notice here? I mean, we're in the Swiss for all of them, and it's a long Swiss position for everything. So, do you want to do that?
Yeah. Is it really 3 positions, or is it really the Swiss?
Exactly, yeah. So, and when I look back through the data a little bit at the big moves up and the big moves down, it almost always tends to be because it's picked really well correlated symbols, and they've had an extreme move.
Between between
Exactly.
owning the top 1, 2, or 3, because
Yeah.
it's all the same position anyway,
Yeah.
because math.
Yeah. And so, one thing you could do, and this would be easier to do, actually, I'm sure we could come up with a way to do it, but you could visually go through this chart and say, well, okay, yeah, New Zealand, Swiss, that's clearly, New Zealand's the weakest, Swiss is the strongest, so I want to be trading that one short. And then I got Swiss and Swiss again, and here's New Zealand and New Zealand again. Here's more Swiss, so there's a theme here. I've traded other flavors of this sort of thing before, and if you go back to just the currency pairs, you could take the top two, the currencies themselves. So say we had something that looked like Swiss on the top, and then maybe Swiss on the top and then dollar, and then New Zealand and Aussie, they're pretty well correlated too. So those two on the bottom, and then you could trade a little matrix between those two. But anyway, I think one of the bigger problems is that they're well correlated markets, and so we could measure that.
Did you look at all the trading just the top pairs and see how that performed in the back test?
Yeah, yeah.
Say that again?
Trading just the top pair and seeing how that performed in the back test. Just trying to get.
Yeah, I think you actually showed that one. That actually
did,
turned
yeah.
out to be the best,
It tends to be, yeah, so,
because it concentrates on the most important pair, and it works as long as the macro conditions in the globe are working. And then when a policy change is made,
yeah,
which happens when people can't take it anymore, which rarely is going to correlate to a calendar day. That's one of the reasons it's different than equities.
yeah.
And then it completely changes. So that actually is going to lead us to a really interesting swing trade strategy using this when you're done.
Cool. So there's a deeper look into the data. If somebody else is interested in this and wants to have a look through, I would appreciate a double check of my work. No one?
Well, I'm pretty satisfied that your spreadsheet is doing the right thing, because you independently ranked them using your covariance matrix to attribute strength to the components. And the results of that ranking are equal to what you get from just the ranking of pairs. That tells me that your spreadsheet is basically sound. But before I make my remarks, I'll listen to some other questions first.
Okay.
Give me about 5 minutes for questions.
Okay. Yeah, and so one of the big things was, and from looking at the original calculation work that the guys at TradeStation Labs did, I played around with their indicator quite a bit before I went and changed the calculations around to do it the BMR style. And it's actually really interesting. And so the difference is, here we're doing the blend between the 3 and the 6 month look back, and we weight it. And what they did was, it was just a simple, I think it was a 13 bar momentum percent, and they smoothed it over 3 bars. And so, when I put the chart up showing the individual currencies, it's really jagged. And that will come to get you sometimes if it happens to be a big move day at the end of the month, right before you do your rebalancing, right? And all of a sudden everything shifts. Well, that's going to affect how you're positioned for the next month, possibly, right? So he smoothed it out. And when I watched this, though, I've been trading discretionarily intraday trades, just looking at how the tool looks on a daily basis, and then how it looks on an intraday basis, like on a 15 or a 60-minute chart. And it's showing you two things, right? It's showing you both what's strongest and what's weakest, putting that into a currency pair so that you can trade it. But of course, that's also going to show you an extreme. And so a lot of the times as well, it's both showing you what's trending strongest, but maybe that's reaching its top now. And so a lot of the times I was witnessing it sort of start to roll over at that point. So there could be a mean reversion element to that side too. One thing I didn't talk about in here was the carry costs. So because it's currency and you're holding it, there will be you're either getting paid or you're paying every day to hold it. And it comes down to differences in interest rates and a few different things, but that all got too complicated, so we just pretend that wasn't there for now. Just put this in here so that you guys can see the TradeStation article, and all the code and stuff that those guys did is up there. So that's all I've got.
Can you go to the slide with that showed the Kiwi Swiss pair with the custom indicator?
Yeah, can you back it up?
The one that was crossovers matter.
Yeah, just I think it's that one.
Yeah. Here's the point that I'm making.
Go back.
Yeah, maybe it's one more.
Yeah, there.
Yeah. What you want to know on this one is, let's say that top pair is the Swiss yen. It's at 9.3. Well, oh, no, this is the pound New Zealand.
Yeah, we're looking at the next one down
Yeah.
because that one was messy. Yeah.
What you want to know is, let's see. Here you can see the spread is the widest, and it corresponds with the peak is the highest. And you've already got the idea expressed here with the RLCO framework.
Yeah.
You already know that this is an extreme differential in relative performance based on the location with respect to the river. And so this is the abnormal move. This is not the time to start buying it. But what you want to know is you want to go back probably 180 time periods, compute that relationship, and find out not just on this 30, but going back 180, how extreme is this
Yeah.
historically to know if I'm really pushing the boundaries or not. If
Yeah.
this was on a 180-day look back, this might only be a Z plus 0.5. Like, this is not an abnormal historical move for that pair. There's more room. But if it's already past Z plus 2, then I'm closer to the end than I am in the beginning. And that's why these crossovers matter, because this told you that the regime, which this period of time which was flat, just changed, and now the Kiwi got weak while the pound is getting stronger, and that tells you right in here, you need to be ready to go because you have all this potential move there, and now suddenly you have a pattern 5, sideways quiet channel, and you're never underwater in that trade.
Yeah.
And even if you used the RL30 as your guide, or the RL90 as some kind of, I'd probably be using the 30. If you captured that move,
Yeah. That's
you're
enough.
happier than a dead pig in the sun.
Yeah.
So the point on this one is always to find out how extreme is the local, is the short-term move compared to what it's ever done. You know, and what you want to catch that thing is as it's starting to, it didn't revert to the mean. It gets to Z plus 1 and didn't revert to the mean. It's starting to go. Now you got a Z plus 2 or Z plus 3, and extraordinary things happen when it gets out into that rare atmosphere. You get those great big spikes when somebody took as much heat as they could and had to cash a big position, and now you get this huge spike. So this shouldn't work on a monthly rebalancing. If you remember the science behind, or the history behind blended monthly rebalancing, was that there are encyclopedias of research trying to find momentum in equities that use monthly performances as the baseline, and there's sort of a self-fulfilling prophecy in there that guys went for 3 months of outperformance and they want to hold for 3 months, and money is coming in from paychecks and pension funds on that regular pulsing basis, which is driving a lot of that momentum, and it all reinforces itself, and that's tied to equities. Currencies don't work that way. It shouldn't be tied to calendar events like stocks you would expect. But what you get, you still get these long moves, but they're not tied to calendar. So what you want to do is find the crossover points,
Yeah.
which is the official announcement that, oh, critical point was just reached, and now it's the other thing. And then finding the historical numbers to show what the magnitude of these moves are. It'll tell you where inside that range expansion you are. So finding your method of quickly finding the individuals that are strongest and weakest
Yeah.
is sound. But then when you look at the pairs, you want to find out how bad is this thing in terms of long-term historical context. That was my question about the ability to compute, for backtesting, and if you can do that. It's even the simplest way might be the difference in the regression line slope of the 30-period regression line is a good proxy for relative strength. So I think what you have is the answer to that. If you used your calculations to find the standout strong and weak ones, and then just do pattern 5.
Yeah.
Pattern 5.
Yeah.
And then use the framework to tell you when and where to place your stops. You have a very nice swing trade here. I would not expect it to conform to a BMR.
Yeah. And so why wedge it into BMR?
So now if you think of that, if you think of the chart that showed the hold the best one, you got a lot of trending moves, and then when the regime changed, it dropped like a rock, and then netted out to be flat. Well, you want that grinding move up.
Yeah.
And then when everybody flips the switch, an appropriate place stop is going to allow you to protect most of that, and you're not going to eat that all. You're going to only take 1/3 of the hit coming back.
Yeah.
So this is a very interesting swing trade. The other thing that you discovered by going through the math and the is now you understand why covariance works internally. Because your math is sound. If you gather a bunch of statisticians together and then ask them to really explain what the tests mean, they can't do it because they know the formulas, but they haven't experienced the effort of trying to understand the principles. And so what you've done here is you know more about covariance than most statisticians know in practical terms. And so what you have is you know why the plumbing works or what the wiring looks like, and there's no substitute for getting your knuckles bloody by doing it.
I didn't even realize that was covariance.
Well, no, that's
I mean, yes, I did. No. Yeah.
I mean that's the complexity when you're comparing multiples in pairs is it gets the computations get geometric because you're trying to deaggregate all those different combos. That's why most people don't do it.
Yeah. And so actually,
this is a very good swing system,
And
not a good BMR.
yeah, which is
principles of BMR, whether you're using the 30-period slope or the smooth 13 bar or a blended monthly, you will find the performance differences pretty quickly.
yeah,
And they are stable until they're not.
yeah. And it's actually that's helpful for me actually as well because
I think you want to concentrate on pattern 5.
Yeah, yeah,
Because whatever the macro conditions were that caused the first expansion, and then when that switches and they come back into normal, now they're in the sideways quiet channel. And then when they start breaking out again, that's the one, pattern 5.
And that's
what would be your time frame on pattern 5? Is it 15 minutes or is it daily?
No, I think these are daily.
this is all daily, yeah.
Dailies.
And I think it's important too because pattern 5, what we'll see here is the break, but there's probably, if you go back, because the BMR calc is fairly slow, you probably find that it chops around sideways for a while. So you need to find the break part.
You want the slope of the 30 to go negative, flat, there's a channel, and that's crossing it. And if you just remember the rule of thumb, when the 30-period regression line crosses the 30-period moving average, that's important. Because where we get chewed up is trying to front run these little pieces when the 30 hasn't turned yet. But here the 30 has turned. It takes that much, this failure is what caused the 30 to get outside the river. It takes that much in whatever chart, whatever time frame, it takes that much information to turn this negative into just getting moving towards, it's not even really positive until it crosses the 0 line.
Yeah.
But when it crosses the 30, that's where the river itself has started to turn. So this is sort of the last confirmation that yes, the turn has been made, and this quite often happens as a pattern 5 happens, and then when the slope of the 30 leaves the river right here, this is the beginning of trending behavior in plenty of time, to capture that kind of a move. And the same thing coming out this way. This is where the 30 crosses the river, and the river has now started to roll over. And if you take this one or this one, you get that. And now you have sort of the end of the extreme move. You get a Z minus 2.5 here. So that ought to be telling you, dude, that was an extreme move. Without even looking at the rest of the chart, you know that that's something that you have to capture. So to me, pattern 5 and a swing trade and focusing on the ones that are in the most extreme conditions. That's what the important piece of this was, to sort down 28 pairs to a couple whose relative performance is really extreme right now compared to all the other currencies. That's where you're going to get those kind of violent moves. So really important swing trade.
What's nice is the hard part of this to code up into a system was the ranking side, just using the TradeStation as a tool. So to flick that into a swing system will be a piece of cake, and I can code it all in here. And,
there's pattern ones. Look at there's a pattern 2. The support at the mean. It gets back to the mean, and didn't fail further, but it breaks out somewhere in here. It's like a pattern 5. So what you discover while searching for other things.
yeah. Bill, did you want to ask something?
Yeah, I was curious. You said you thought you know why it has these long trending behaviors and then really sharp reversals. What's your thoughts on that?
Oh, it's the correlation. So it's you're picking stuff that ultimately is all together, and then they all fail at the same time, and you're basically 3 times in or 4 times in or something, right?
Yeah, there are global macroeconomic conditions that happen not because of currencies, but because they're happening in the global markets, which then get expressed in currencies based on where that country is in its economic cycle. And it just happens that those two are poorly positioned for that policy set, and then off they go. So when the global conditions change, or guys holding positions in those currencies can't take the heat anymore, and they all start collapsing, that's why you get that sharp change at the turning points. But the pain, too much click, and then everything clicks, and then it's a huge, sharp reversal. So that's why I think that's what it's. And that's not tied to calendars. That's tied to money management and leverage and risk rebalancing dynamically. Guys are not keying that. That's not being fed by calendar events where money is coming in that has to buy equities. That is all psychology and risk management and money and risk.
Well, the only calendar events will be economic news, which will shift this stuff pretty quick, right?
Or the Swiss make a change. Oh,
Yeah. That's
Oops.
I wonder if you're putting stops in. I'm assuming you did this stop list.
Yeah.
So I'm wondering if adding stops might be a way to preserve some of those gains.
Maybe.
Put about a 60. Try a 30, 60, 30, 45, 60 regression line on there as the trailing stop.
Okay.
You could do the 30. It gets a little tight, but you'd be happy with just using
on this
the 30.
occasion.
Pattern 5 with using 30 would be fine. So would a 45, and you would be really happy that you did.
Cool. Yeah.
The BMR score, when that calculates it, does it have like an RSI component in it where it ranks the individual currency based on how strong it is, like momentum or?
Yeah,
It's basically momentum.
You can substitute any measure of smooth momentum there, like an RSI 14 would work. The slope of the 30-period regression line would work fine. And I tend to like that one because the 30-period regression line, the moving 30 is so smooth. Changes in the slope are measured. There's no gaps in it, and it's very adaptive compared to other measures of RSI. But any measure of momentum and price performance would work. Doesn't have to be the BMR.
Okay, so these scores, basically a high score reflects something that has a high momentum, and a low score reflects something that has a negative momentum.
Yeah.
So
Yeah, negative. So it's still a lot of momentum. It's just the other way.
Okay, so I think this is an awesome concept that you can use, like my brain was going insane as you were talking about this, thinking of all the different things you can do with this.
Cool. That's what we want. Yeah. That's why we're here.
Basically, you have, I think, what I was thinking is you want to break out. So you want to see when one is breaking out big this way and one is breaking out big the other way. And you could use that for day trading. Like you could,
Yeah.
Or whatever it is. You could even just use that as like a basic breakout system, almost like the turtles,
Yeah.
turtle
Yes.
system.
Yeah.
Look at the size of look. If you put frog quality numbers on there, look how tight the daily ranges are here in the chop of the river, and then you start getting range expansion, and all those big range days, all that thing did was open it and go. And just like anything that you use that trend follows intraday works on there. Frog boxes would be extraordinary on that.
Yeah, I think your big concept here is trading currencies relative, coming up with a relative strength where you're isolating the currency from the pair.
Yeah.
And then finding the strongest one, going long, and shorting the weakest one. And you can basically pick any method to kill it.
You're right, yeah.
And it's probably going to do very well.
Yeah, and one of the things I noticed about this one here, just this example, we see this was a nice move. But if you look down here, and you can never see this, I can never see this before so directly, but the pound is basically just staying flat here in its strength score. It's the Kiwi going down that's caused that to go up. And you can work that out when you're trading currency a lot, if you've got lots of charts open at the same time. But you got to be in it.
There's no way you can find that visually. You would have to be able to visually compute 28 pairs and figure out that it turns out the pound is strong because it's not weak, but the Kiwi is really weak. And you'd have to be able to visually integrate that from 28 different, you can't do it. But the math will find the thing that is relatively strongest. I would probably take the two strongest and the two weakest and make a little a short list of maybe 4 pairs to look at.
Yeah, that's what I was trying to explain
and then
before.
Put an RLCO framework on that. And now you're using the long-term BMR style relative strength, which is appropriate for currencies which do have long trending moves. And using the swing trade to time the entries and then refining it intraday for those big candles. There's a way to blend that into getting all 3 time frames in there. BMR just finds the things that are ready to run and then time them gently with the swing trade. This thing is going to be of interest for 2 weeks when it leaves the river, and then be ready to kill the whale on that particular day. Good on that day. This is really strong.
Yeah, I think the other thing I was thinking of is you have the correlation where you have currencies that are correlated.
Yeah.
Is coming up with a beta score and then somehow factoring that into the score. So you want the strongest non-correlated and shorting the weakest non-correlated. So you get the biggest move
Yes.
like this.
I think I understand that. Yeah.
So you have,
Yeah.
like the curve, a lot of them were similar because there's correlation between the currencies.
Yeah.
So you want the strongest non-correlated currency to the strongest, or to the weakest non-correlated currency.
Yeah.
And then pick the pairs, instead of picking 3 pairs that have the highest and weakest scores, pick the highest non-correlated pairs.
Yeah, no, that's a good idea. I got that far and I started looking at, how could I start to filter this by correlation? And I just ran, that's as far as I got, and I wasn't sure how to calculate it, so I think I can do that now, actually. Yeah, thanks.
Same idea expressed now with the indexes. So this compares the 30-period regression line slope of the country ETFs against SPY. Just using SPY as the baseline. So whatever the slope value of the S&P is 0, right? And then we're going to compare the slope of all the other indexes against that and find the correlation factor. And then we're going to find the ones that are the least correlated and the most correlated. Most correlated are the ones whose slope is the closest or identical to SPY. And the ones that are most uncorrelated to the upside are going to be the ones that have the most alpha. Because what we're going to do is we're going to subtract the slope value of SPY against the slope value of the other indexes. And the difference is the alpha of each of those. And so this measures the amount of correlation. How far away does this index get from the S&P historically? And let's put statistics on that. Right now, Japan is almost 2 standard deviations uncorrelated from the S&P. Japan has been killing it for 3 months. It started killing it when it left the pack back here. This is about 20 days ago. When Japan started going up, there's a swing trade of 20 days in there, which is going to be really nice in the currencies too, by the way.
Yeah.
because that's a big part of the component. And Asia less Japan is here. But it's now starting to turn after a move of Z-2. So I'm about ready to tell you that if you had been shortened that against the S&P, you probably ought to know where your stop is. So this is nothing more than looking at the currencies and their relative performance and finding out how extreme this move here from EFA from Z-3 up to here. Oh, has that been good the last 2 months? It's been killing. SCZ, the European small cap. Italy. You can't believe Italy. This is, oh. Now, why would you think Italy? Well, because this shows you how to find those things. So you want to find those extremes and see what's interesting, and then put a decision-making framework on it. So what you've done with currencies is what I'm doing here, just looking at the correlations and subtracting out the market piece, so I can just find out what the index is doing. Brute force, but relative strength, and I'm just using the slope of the 30 as a smooth price performance.
As the regression line or the moving average 30?
Regression line slope. Regression line slope. Because that's much more adaptive, but not too adaptive. So, man, there's a year's worth of.
There's some more stuff to
By the
do
way,
in here.
You can make a career out of that idea with the currencies, by the way. Because nobody else will look at that. And even if they look at it, they can't help it. It's so large. It's 30 times the size of the equity. You can't just tweak that out. When those macro moves start moving, dude, they move. Because you're talking about governmental policies and trading partnerships that last for long periods of time.
Sure. You don't have to worry about moving the market there. Yeah.
It's a very basic question. The RLCO you have with your Forex, is it the same parameter we do for day trading or swing trading?
Yep. Yeah, I just use the standard stuff, yeah.
'Cause I thought I tried it and it didn't work, so maybe it's okay. I'll go check. Thanks.
What did, you
I
mean,
don't remember. I tried it like maybe 9 months ago or 6 months ago.
what, just putting
Just,
the currencies on the top of the framework and it didn't look
Yeah,
right?
I tried to put the framework and it was
Okay.
not doing. It was kind of weird.
Was it really short term?
Maybe
said-
15-minute charts or stuff
Okay.
like that.
15 is probably like the limit. When you start to go really low, it gets really noisy.
Okay.
Yeah. It's still doable, but you just got to be aware that it's really noisy.
I'd be looking at the dailies on this. Find the pair that are collectively the most extreme. Know how much more extreme it could get because you've looked back to the test, but look for those pattern fives. Oh. Okay.
Cool.
Any other questions? It's our first 30 minutes.
How'd we,
53 minutes.
how'd we do? Not bad. Okay.
That's actually pretty
Okay. All right. Thank you.
good. Not to exceed 30, but really.